Most people look at their bank app, see a number on the screen, and feel safe. That's my money.
But what if I told you that number is not cash? It's a story the system is telling you.
Not a conspiracy, not a slogan, an architectural fact. Your bank balance is not a pile of dollars with your name on it. It's an IOU, a promise, sitting inside someone else's balance sheet.
In this file, we're going to walk into the vault and find out why the vault is mostly empty, why the system can show you $12,543.27 and still have almost none of it in physical cash.
Stay until the end, because I'm going to give you 3 banking filters the wealthy use, tests they run on every account, every bank, every balance, to avoid being the last one holding the empty bag.
If this is your first file here, welcome to Digital Dollar Wallet. We don't do bank hacks or coupon tricks. We dissect the financial operating system you live inside and redesign it from the inside out. If you feel like you're doing everything responsible with your money and still feel exposed, you're not crazy. You're reacting to a structure nobody explained to you.
Hit subscribe if you want to stay inside this investigation. I won't make you feel comfortable. I'll make you feel prepared.
Let's start with the first lie. Your money is safe in the bank. That phrase only works if you never ask 2 questions. Safe from what? And safe for who? You were trained to think of the bank as a vault. You put money in, they store it. If you need it back, you ask nicely. They open the door, hand it to you. Childishly simple. But the modern bank is not a vault. It's a machine. And machines don't store, they transform. Your deposit is the raw material. Loans, interest, and fees are the products. Here's the part most people never hear clearly. When you deposit $1,000, the bank doesn't put your bills in a box labeled with your name. They record a liability. They owe you $1,000. Your balance is their promise. On their books, your asset is their debt. They're not guarding your wealth. They're borrowing it, on demand, at almost 0% interest. Then they multiply that promise. Using your deposit and others, they create loans many times bigger than the cash they actually hold. Welcome to the logic of fractional reserves.
This is why if every customer walked in tomorrow morning and tried to withdraw everything, the system would break by lunchtime. The vault was never built for everyone to show up at once.
Most people never see that because the system runs on one fuel, trust. As long as everyone believes the story on the screen, nobody tests the vault.
Quick question for you. Have you ever seen the bank limit your daily withdrawal or tell you system offline when you needed money? If yes, drop limited in the comments.
Now let's zoom in on the real trick, how money actually appears. You were told the bank lends out deposits, cause and effect, simple. In reality, when a bank approves a loan, it doesn't go hunting for your deposit in a drawer. It types numbers into a system. Those numbers become someone else's balance, new money out of nowhere.
The loan creates the deposit, not the other way around. Your balance is part of a web of promises, all spinning around the same center. Trust that everyone won't demand cash at the same time.
This is why I say your money in the bank doesn't exist the way you think it does. It exists as a claim, a ticket, a casino chip that works until something breaks. If the bank is healthy, if the system is stable, that chip spends like money. If confidence cracks, bank panic, contagion, capital controls, your chip can suddenly stop working. We've seen it in different countries. Cash withdrawal limits, frozen accounts, temporary holidays that last weeks.
And every time the story sounds the same, for your protection. I'm not saying this to make you paranoid. I'm saying it so you stop confusing two things, the number in the app and your actual liquidity. They are not the same. Liquidity is not how many digits you see. It's how much purchasing power you can access under stress when everyone else is also trying to grab theirs.
The official story is that your money is protected. Deposit insurance, government guarantees, logos and stamps that say, "Don't worry, we've got you."
But protection always has a price. Insurance doesn't erase risk, it moves it, from the bank to the government to the currency itself. When a bank fails, the system has two options. Let depositors take the hit, or print and borrow its way out of the hole. Either way, someone pays. Either way, something cracks. If they let depositors fail, trust dies quickly. If they print, trust dies slowly through inflation. The story survives, but the purchasing power melts. This is why the wealthy don't obsess over, "Is my bank guaranteed?" They obsess over a different question. How much of my life is exposed to this single story? They treat the bank like a transit station, not a home. Money passes through on its way to assets, systems, and structures that live outside the vault. I learned this the hard way. Years ago, I had my entire emergency fund, business cash, and personal savings in one safe bank account. It felt neat, organized, responsible.
Then one week, the bank's online system went down. No transfers, no withdrawals above a tiny limit. Phone lines saturated. I wasn't in danger, but I felt something I'll never forget. Helpless.
At that moment, I realized the risk wasn't in the code. It was in my structure. I had built my entire liquidity on one fragile story. Filter number 1. Layers of liquidity. First filter the wealthy use. Layers. They don't ask, "How much money do I have in the bank?" They ask, "At how many speeds can I access purchasing power?" Fast layer is physical cash and instant access accounts. Slow layer is investment accounts, business credit, assets they can borrow against. Each layer has its job. If all your money lives in one checking account, you're not simple, you're fragile. One glitch, one freeze, one suspicious flag from some algorithm, and your entire life locks. I'm not telling you to put cash under the mattress or to play survivalist. I'm telling you to stop treating a single bank balance as your oxygen tank. Audit yourself tonight. How many independent sources of liquidity do you actually have? Bank 1, Bank 2, brokerage, cash, credit lines, or just one app on your phone? Drop your number in the comments if you're brave. How many separate places could you access money from in 48 hours if your main bank failed? 1, 2, 3, or more? Filter 2. What's behind your balance? Second filter. What sits behind your balance? Not emotionally, structurally. Is that account backed by a local bank with 3 branches or by a diversified network? The middle class picks banks by convenience. Closest branch, nicest app, better logo. The wealthy pick banks like they pick business partners. Balance sheet strength, risk profile, exposure. Again, I'm not here to give you a checklist of safe banks. I'm here to give you the question they're terrified you'll ask. If this institution broke tomorrow, what would actually happen to my life? If the answer is everything stops, you don't have a bank. You have a single point of failure. Risk is not just about, will this bank fail? It's about, what percentage of my daily obligations depend on this one institution working perfectly? Filter 3. Flow, not storage. Third filter. The wealthy don't ask, where do I store my money? They ask,
Through where does my money flow?
They understand the bank is not the final destination. It's a temporary parking lot between cash flow and assets, between income and architecture. Your salary lands, your business revenue hits, your rent comes in, and then what? Does it sit in digital limbo for months, or does it move into structures that generate more flows? This is where the last two videos matter. Pillar 1, cash flow. Pillar 2, equity. Pillar 3, leverage. The bank should be a bridge between those pillars, not a monument in the middle. If you missed the leverage file, the one where we turn debt from chain into lever, you're missing half of how the banking engine actually works. And if you skipped the equity file, the one where we expose the fatal flaw inside the first $100,000, you have no idea what kind of floor you're standing on while you use these banks.
If this series is already changing how you see the system, hit subscribe. Season 2 is designed to reprogram how you think about banks, money, and power permanently.
In a minute, I'm going to send you to the leverage episode so you can see how banks use debt against you and how to flip that script. But first, I want to bring this down to street level. Forget the vault. Picture an ATM. It shows a green available balance. You feel calm. Then the machine says, out of cash.
Nothing wrong with your account. The numbers still glow. But your ability to turn that story into food, rent, gasoline, gone. That gap, that's the whole point of this file.
Your life runs on obligations. Rent due, payroll due, debt due, tuition due. None of those care how big the number is on your screen. They only care what you can move today. This is why I refuse to treat banks like gods. They are tools, powerful ones, dangerous ones, but still tools. And tools belong in your hand, not over your head. Right here is where the card goes on screen to the leverage file. Watch that next if you want to understand how banks weaponize your debt and how to build your own control panel instead. Let's land this plane. Your bank balance is not a treasure chest. It's a claim inside a fragile story, a story that works until too many people question it at once. Your job is not to panic, not to run. Your job is to design your life so that no single failure, no app, no bank, no policy change can put you back at zero. Layers of liquidity, multiple channels, clear flows from bank to assets, a mind that understands the difference between numbers and real options. That's the architecture. If this is the first file you've opened in this season, don't stop here. You've just seen the vault. Now you need to see the game board. On screen, you'll see the video called Debt Power, How the Rich Use It to Stay Rich, the leverage file. That's where you'll understand why banks love your debt more than your deposits. And when you're done with that, go back one more step to your first $100,000 has a fatal flaw, the equity file. That's the floor all of this stands on. You can't control inflation. You can't control bailouts. You can't control what a central bank does at 3 a.m. on a Sunday. But you can control how exposed you are when they pull the next lever. Before we close this file, tell me in the comments, what shocked you more today? That your deposit is the bank's debt, or that loans create deposits out of thin air? Your answer becomes the next investigation. The more clearly you see the story, the harder it is for the system to write it for you. Here at Digital Dollar Wallet, the mission is simple. Take people out of the role of customer and put them into the role of architect. If you want to be part of that group, subscribe, hit the bell, and stay inside the blueprint. This isn't about beating the bank one time. It's about never being surprised by it again.
This case file closes here. I'm Andrew. I'll see you in the next investigation inside the vault.
Until then, remember, the numbers on the screen are just the surface. The real power is in who writes the code underneath.